Hi guys, Jeebus here. It's 1st of March. A very good evening to everyone. It's very sunny today, very hot. So hope everyone has had hydrated themselves, keep themselves healthy in this COVID environment. So because of COVID, the markets are very bearish. Let's swing over to the charts, okay, and you can see why I say so. ATR, an uptick, candlestick, big long body bearish body candlesticks for this is for FTSE, okay, and if you look at STI, okay, it displays similar uptick in ATR and long long bearish candlesticks, okay, and I think it's also the same, if I'm not wrong, for S&P 500, probably even more pronounced. You see this, basically it means in the weekly time frame, okay, 40 weeks moving average is 200 days moving average. The long term moving average has been breached. It is officially in the in the bearish region, bearish trend. So let's zoom back, okay. So how we're gonna do with this? Okay, so we know that markets are bearish because the indexes are all performing below 200 days moving average. Okay, the markets are volatile because there's an uptick in ATR. So what you do is, for me, instead of long, I will short or stop trading. But more suitably for me, I will stop trading because I might not be able to, because like I'm a long only kind of person, and then because of the increased ATR, I will actually reduce the cumulative risk I expose myself to, okay, because I'm while the trend is very obvious going down, I might not be able to stomach, the big swings up and down if my positions are too big. Okay, so I think it's really really good right now to maintain your emergency funds. Even more important because you know right now it's not just a market correction or market downtrend. It is possibly, I would say, at least in Singapore, a recession. Okay, a drop, a significant drop in economic activity. You can see it, okay, in your work and yourself observing the sentiments on the ground, okay. So it's very possible to lose a job, or even have a overseas medical emergency when you travel overseas for holiday, or have an unexpected death in the family that requires a funeral that's like taking pure cash, okay. Or it could simply be a combination of sequential minor emergencies that can just sap out all your liquidity very quickly. So it's very very important to like not touch your emergency fund. You know, you only want to use it for the real emergencies. So that's it. Okay, that set aside. Now we talk about how do we like capitalize on this situation. So I think the important thing we need to do is we need to spend time imagining. Let's think of what are the mega trends going forward, and perhaps this black swan event, this COVID, how does it affect our daily business? Maybe for one thing for sure is that we are aware. I take some time and I become I realize that there's increasing awareness for environmentalism. So I think the narrative is very clear that there will be more and more meat alternative companies, and along the value chain, you know these companies along the value chain will actually benefit from the increase in such demand. So we have to look into companies that are related to such that will benefit from this increasing environmentalism. And like second thing I would like to say is the black swan event, this COVID-19, could be the catalyst for remote working. I think we have been like talking about working from home remotely, working for the longest time, having this flexibility for the longest time. But this COVID-19, with government sanctioned work from home and companies all looking at business continuity plan, I think the corporations will realize that many functions can be completed remotely from home instead of at an office. So there might be a reduce in need for commercial offices, and I'm not sure whether the office space slump will recover fully at the end of this. So I think it's very important, okay, to sum it up, is very important to like spend time to imagine, look at the mega trends, and then think 2 steps ahead at how it will affect businesses, and how do we like capitalize on this. Okay, so we need to know what are the categories of companies, industry that will benefit from this, and do the due diligence. So after you do your due diligence on the kind of industries and companies you look at, I think it's very important to have a strategy. And even before you have a strategy, you need to actually know your cash flow and your stability, because it really determines how well you accept or you can take any shock, which is the resiliency. Okay, I mean, just put to you simply, if you have you understand all the things you can buy very well, but then you do not know that, hey, you're working in a company, your job is not very secure, your stability is down. Okay, and then you buy something, you commit a lot of money to it, and then your you lose your job and everything drops. Okay, you're screwed. Okay, then secondly, okay, I think after you know that, you need to actually be able to plan how you allocate your resources, your money, okay, and your time and your attention, and your priorities, and the sequence of how you buy all these counters. And lastly, how do you achieve your desired end state? Okay, there are many sharings out there on how you can like reach financial independence, retire early. Go read them, think about it, synthesize it, okay, contextualize to your situation, to your personal preferences. For some people, they do not need to like have a passive income of like 100K a year. They're happy off just spending $2,000 a month because they enjoy the job they do. I think it's perfectly fine. Okay, so go read, synthesize, contextualize to your situation, and then you create your strategy. Okay, and then when you create your strategy, do consider different approaches. Okay, it could be cycling between the different industries for capital gains, and then injecting these capital gains into an income investment to generate the cash flow, or to actually just allocate the resources based on your personal risk profile, and rebalancing it every quarter or every half a year or every yearly with the savings that you've made. And also being able to prioritize. Okay, this is like prioritize what you want to buy, which industry you want to put money in, and the purpose for each of these after you have done the due diligence. So you need to have a very complete picture of what to do, when to do, uh, down to quite a clear resolution. And with all that in mind, also you will also need to have an investment framework. Okay, for the individual shares, I will not be sharing about the trading, because I've been like sharing about trading for the past 1 2 3 years already. So I think it's good to have an investment framework. Okay, I read this out, the good investors. Okay, they have like basically these five basic categories. Okay, maybe I run through it quickly. Market size versus revenue, or the expected growth. Basically, this is the addressable markets that your company is able to address. Okay, the bigger the difference, okay, the greater the increase in price you would see. Okay, and then next would probably be having a healthy balance sheet. Healthy balance sheet can either be positive positive cash flow, or it could be having a very healthy amount of debt. okay, that which is significantly small portion of the total assets, okay, and also having a strong management team, a management team that demonstrates integrity is very important these days, okay, and a management team that is able to react to difficulties and overcoming it very effectively, quickly and responsively. Okay, and then the third point I want to share is that companies, it's best to have a recurrence. The nature of the business is best for it to be recurring. It could be like subscription basis like Spotify, Netflix, or it could just simply be the business nature itself, where it could be a hobby that uses that it could be a business that sells hobbies, certain consumables, so it's very recurring in nature, okay. And also you need to buy companies, right? Okay, ideally your company has a good track record of having the ability to grow its business. So it's not only growing one way very high, but it has multiple streams growing. So the business actually grows in more than one way and is resilient to the different fluctuations. So with that, I thank you for your time. Thank you. And if you like what I have shared, do like my video and subscribe to my YouTube channel. Thank you.